Hello, I'm John Cunningham, and welcome to another episode of the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today's show features interviews with executives of 3 public companies. First up is QYOU Media, stock symbol QYOUF on the OTCQB. QYOU is one of the fastest growing creator media companies operating in India and the US, producing, distributing, and monetizing content created by social media influencers and digital content stars. We'll learn more when we speak with the co-founder and CEO, Kurt Marvis, later in the show. Next up is Recruiter.com, stock symbol RCRT on the NASDAQ. Recruiter.com is an on-demand recruiting platform providing flexible talent acquisition solutions that scale from startups to Fortune 100 companies. Recruiter.com is serving major customers like Pfizer, Zoom, ADP, and many others. Shortly in an interview, we'll learn more when we speak with Evan Sohn, the CEO of Recruiter.com. Up next is DGLY, stock symbol DGLY on the NASDAQ. DGLY is a diversified holding company with operations in video solutions technology, human and animal health protection products, healthcare revenue cycle management, ticket brokering and marketing, and event production. We'll learn more when we speak with the new president of DGLY, Brody Green, later in the show. Now, before we get to the first interview, our quote of the week. It comes from the book Small Stocks, Big Money. You can be happy with the companies you own, but you may not be happy with their stock performance. If you know what you're investing in and you're patient, you'll have a day when the market recognizes the value, but that may not be today or tomorrow. This quote comes from Byron Roth, CEO of Roth Capital, featured in Chapter 7 of Small Stocks, Big Money. This is a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now let's get started with our first interview today with QYOU Media.
Kurt, great to see you again.
Good seeing you, Craig.
QYOU recently reported revenue up 156% for the first 9 months of 2022, with consecutive quarters of record growth, Q2 and Q3. What is driving this exceptional performance?
Well, I think really it's that we're firing on all cylinders as a business right now. We have 3 specific business units, 2 in India, 1 here in the US. All of them are achieving record revenue growth. All of them are building their business portfolios. On the channel side in India, we went from having 1 channel in 2021 to having 5 channels now in 2022. We've launched our own direct app, QPlay. We've recently acquired Maxim Tech, a casual gaming company in India. So we have a lot of things that are happening there that are building that growth. Chatterbox, our influencer marketing business in India, continues to grow and add new clients like HP and Procter & Gamble. And here in the US, we've added gaming companies, automotive companies. So we continue to see all 3 businesses drive growth through more and more customers and more opportunity for us. And we expect that to continue dramatically over the coming years.
Kurt, how far can you take this whole thing? I mean, how big is the market opportunity for this expanding network of entertainment offerings?
Well, I mean, I would argue the sky's the limit. I mean, I think what we're building here is kind of a next generation media company. If you look at the traditional media businesses that grew off the growth of cable and satellite, off of the home video industry, more recently off of the paid streaming models, we're kind of a next generation version of that. We're building off the excitement and the viewership that revolves around short form video content, off of what's taking place on TikTok and YouTube and Instagram today. And we would argue that these are the platforms that already are mainstream, but that are going to drive a media business like ourselves to really excel and exceed. And when you combine that with what is in India, India is the youngest country in the world. 850 million people, 35 and under, 650 million people, 25 or under. So you're talking about twice the population of the United States that's 25 years of age or younger. We see the combination of that and the world of social video being potent for growth. We're not the only ones who see that. And we think we're going to ride that wave very, very successfully on a go-forward basis.
Kurt, that revenue has been ramping up. How is it happening? In other words, what's the business model and how does QYOU Media make money?
Well, we're big believers that especially young people today, and even more so in India, the right price point for them is free. That's what attracts younger people. They're used to getting a lot of their entertainment content for free, and we're following that model. We are ad supported currently. We have now 77 major advertisers in India and another 25 plus among our influencer businesses. So we've got over 100 blue chip brands, everybody from Procter & Gamble, Unilever, Coke, Pepsi, Amazon, Google, you name it, that are spending money with content that we're publishing now. And so we're big believers that growth is going to continue. We also recently had an acquisition of a small gaming company in India called Maximum Tech. We haven't even started with that yet, but we think there's a tremendous number of opportunities around monetization of gaming content on mobile devices. That can include a direct monetization of that with prizes and money. So we see a huge opportunity ahead of us in terms of the growth of the business from a revenue perspective.
QYOU has assembled a world-class leadership team. Tell us about your background as well as some of the other key players on your team.
Well, you can see part of my background in the background behind me. I was very involved. Unfortunately, I'm old enough to have been very involved as one of the creators of many of the videos people saw in the 80s and 90s, back when MTV was, I would argue, kind of the voice of a generation of youth. We look at what's happening in the world of social video today to be that same thing. And our management team, from our board of directors, which includes people like Andy Kaplan, who ran all of Sony's television business globally for 20 years, Steve Beeks, who spent 20 years with Lionsgate, which I would argue is one of the leading companies in terms of youth-oriented content in the movie and television space. We've got those people behind us, and in addition, a management team of people that are just stellar reputations and resumes from the world of traditional broadcast media, digital media, and on. So we think we've got a great team to build this with. We're now almost 200 people across the board in the company, and we're really prepared for strong growth in 2023 and beyond at this point.
In summary, Kurt, what is the essential value proposition? Why should investors take an interest in QYOU Media right now?
Well, I think there's a number of reasons. I mean, the first thing is we feel that we're just massively undervalued at this point in terms of the revenue trajectory we're on. We reach 125 million people with our products in India every week, with the number of advertisers we have, with all of that. But I think also, when you look at the big boys, the Googles, the Amazons, the Microsofts, the Netflix, that are pouring billions of dollars into their businesses in India because they know how much growth is going to happen there, that's not a pure play like we are. We're a pure play for some investors that see the opportunity for growth that's going to certainly occur in India on a go-forward basis. And we're amazingly well positioned to be driven not only just by our revenue, but by the fan base of young Indians that we've been growing over the last 2 years. So if someone believes in the Indian market and what's going to happen there, which I think a lot of people do and will if they start to pay attention to it, we're an incredibly great opportunity for them to participate in that.
Now, to get more information on QYOU Media, visit QYOUFinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like QYOU Media. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money. This is a book written by RedChip's CEO, featuring interviews with some of the biggest players in the microcap space. Order your copy at Amazon.com for just $18. Now let's move on to our next interview today with Recruiter.com.
Evan, great to have you back.
Thanks so much, Craig. Thanks for having me.
Recruiter.com, an on-demand recruiting platform providing flexible talent acquisition solutions that scale from startups to the Fortune 100. Evan, for viewers new to the story, please give us a brief overview of Recruiter.com.
Sure, and thanks again. Recruiter.com is really a startup. We've been a startup on NASDAQ. We actually uplisted to NASDAQ July of 21. But the company is really only a few years old. We are a destination site for recruiters. We have a job board for recruiters, a marketplace for recruiters. We do a lot of things to help recruiters do their businesses better. And companies, large and small, leverage our platform to access these recruiters. But let's take a step back just for 1 second. The world of talent acquisition, and we hear about it every day in the media. I'm actually on CNBC talking about it once a month, right before the jobs report. There have been two ways to hire. You either did it yourself, so you posted a job on ZipRecruiter or Indeed or LinkedIn, or you hired a headhunter and you paid 20 to 30% of a salary. We're the guys that are in between. And what people really want to do is they want to do it they want someone else to do it, but do it for them, right? It's as if you did it, but not paying the big giant fees. And that's what companies come to us, large and small, to do.
Now, is that what on-demand recruiting is, Evan? And tell us more about on-demand recruiting and its importance to Recruiter.com.
Yeah, absolutely. So on-demand recruiting is really our flagship product, our flagship service. And we really proved out this model throughout 22. We did a bunch of acquisitions in 21 to really formulate the product. And in 22, it really gelled with great product market fit. You know, we ended 22 with companies like Cerner and Zoom and Pfizer and Geico, all trusting our recruiters to help them with really their most precious asset, which is in hiring. And our recruiters, our on-demand recruiters, work through our platform on behalf of those clients, helping them find talent. And that's really become the lion's share of our overall revenue. And then we have an ancillary marketplace service, a lot of self-service revenue, very high margin revenue that supports that overall product line.
Evan, you mentioned revenue. Let us look at it a little more closely right now. Recruiter.com in November announced its third quarter 2022 financial results. Revenue for that quarter was $7 million. That was a growth rate of 11% year on year and indicative of the consistent growth in revenues that the company has been experiencing. What has been spurring that growth, Evan, and what is the pathway to profitability for Recruiter.com?
Sure. So our Q3 numbers were year over year very strong, but we started to really get a sense of our tech sector. About 20% of our revenue was coming from the tech sector and about 15% coming from the recruiting and staffing sector. And we really got a sense towards the end of Q3 that those numbers are really going to be hit hard. And we really started to go into really strong OpEx mode and adjusting our operating expenses to align with that overall gross profit. So we really saw that happening probably a couple of weeks ahead of everybody else. And certainly the major companies, because we always use recruiters as that sort of air traffic controller of what's going on in the overall job market. We thought companies were just overhiring. And what do you know? Companies were overhiring. So our real mission, and we set up a 3-year mission, and we talked about this in our earnings call. You know, in 21, it was really about product market fit, and 22 was about growth towards profitable adjusted EBITDA. And that's really been our primary focus throughout this year. And we gave some guidance in our Q3 earnings that we expect to be on a positive adjusted EBITDA in Q1 of this year. So we did hit some operational sides, some of our software sides. We actually in Q4, and these are all public, we spun off one of our software platforms to really reduce OpEx even further, still benefiting from the overall revenue itself. It's a long-winded answer, but a lot went on. You know, we take every day seriously, and every day matters, and we take our delivery for our shareholders very, very seriously.
Absolutely, Evan. Let's take another step back in time to October when Recruiter.com announced the next step in its strategic plan to increase shareholder value. Central to that plan, Evan, was a reduction in operating expenses, including a reduction in your own salary. Please elaborate on the key elements of that plan.
Thanks. So I took a 20% cut in salary, as did some of the other management, and we really right-sized the company a lot around gross profit. So like others, we overstaffed slightly ahead of demand that we expected to be getting from our clients. Our clients would tell us what they expect, and we were staffing accordingly. And we really used October to really clean up our overall operating expenses. No stone unturned. Every vendor was renegotiated with across the board. We had some debt that we were negotiating as well, but really took our operating expenses seriously, and we're really living in that now.
Give us your essential value proposition in closing now, Evan. Why should investors take an interest in Recruiter.com right now?
Sure. So our stock is, very, very undervalued, as most. And I think that a lot of what we saw really from September until today was really as a result of us filing a shelf. We filed a shelf like good housekeeping. We became effective in August. It's something good housekeeping to have. And there was this assumption that we were going to be selling capital, and we did consider it. We have some debenture notes that aren't due until August of 23, and we thought we would tap the capital markets for that. Clearly, we're not going to do that now. We don't need the cash to provide for our overall operating expenses. We've really aligned that accordingly, and we're just going to continue to grow the business as if we were a startup. If you look at our stock as it relates to overall sales, we're really trading at a fraction of our overall sales. And if you look at our comps, whether it's a Korn Ferry who's trading at 1 times revenue, or an Upwork or a Fiverr that are trading at multiple times revenues, we are clearly, as it relates to our overall competition, really, really, really undervalued from a significant perspective. So management owns over 12% of the company. We have a pretty low float that's out there today. But if you look at our trailing 12, $28 million trailing 12, nice growth rates, et cetera, in terms of our overall stock, it's pretty significant. Companies are now going to still need to hire. Even though we hear about layoffs every day, the quit rates are still higher than ever before. Companies are still going to have to hire. Now, do you want to hire a full-time recruiter in-house? No, you actually want to use an on-demand solution. On-demand solutions typically do very, very well in tight markets. And certainly when there's a looming recession, I don't want to have to add another full-time resource with healthcare benefits and all those other things. I'd rather tap a platform like ours that allows companies to scale up and scale down.
It is a great story, Evan, and you tell it so well. Thanks for being with us.
Thanks so much.
Now, to learn more about Recruiter.com, visit RCRTinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at RedChip.com, featuring emerging growth companies like Recruiter.com. Again, visit RedChip.com and subscribe today. Now let's move on to our next interview today with DGLY.
Hello, everyone. We are pleased to have Brody Green in the studio with us today. Brody is taking over as the new president of DGLY in 2023. Brody, congratulations, and great to have you on the show today.
Appreciate you having me today.
Brody, as the new president of DGLY, you are filling some big shoes, namely those of Stan Ross, who is going to remain as CEO. Tell us more about your new role.
Yeah, Stan obviously was with the company for the past 17 years, and he's done a great job with the company, and it's gonna be a big set of shoes to fill. But I'm looking forward to the opportunity, and Stan's going to take over the entertainment side and really follow his passion and what he runs after, which is truly entertainment is where he was born and raised. So it'll be a new chapter for him, which I'm excited to see.
Tell us more about your passion for law enforcement, and I understand you have a family history?
Correct. Yeah, I actually had a father that was in law enforcement for 37 years and an uncle, I think he surpassed 41 years in law enforcement as well, and a brother in the Air Force, so I'm the odd one out, but it's something I've been passionate about and grew up around for my entire life, so it's fun to be on this side of it.
All you did was grow up to run a company, right?
Exactly, yeah.
Brody, the company that you are leading has been doing very well recently with some great revenue growth, 83% growth year over year in the third quarter of 2022. In particular, your video solutions, the legacy business of DGLY, and your healthcare billing are driving some strong growth. Give us some details, please.
Yeah, the video solutions side's been doing great with the new products we brought to market earlier this year. More to come there as well, which is exciting to see all the R&D starting to pay off. And then the medical billing side, we started mid-2022, and through several creative acquisitions in the past year or so, we're starting to see those pay off and all really come together, both top line and bottom line for the medical billing side. And the video solutions side is also on a very nice upward trend we're excited to see continue on.
It is always so impressive to see how much sense all these different segments of DGLY make. Let's look at one of them again a little more in depth, Brody, the healthcare. The DGLY healthcare pursuing a roll-up strategy in the medical billing industry. Give us more details there.
Yeah, so that one we started probably mid-22, as I stated earlier, and that one we've done just a range of acquisitions of smaller family offices, different sizes ranging from $500,000 to $3 or $4 million. So it's any shape and size we've looked at acquiring and then right-sizing them, maximizing the profitability and the margins on them to really just bring in good revenues and good profitability as well.
One of the segments that must be near and dear to your heart, the video solutions segment, has passed an important milestone recently, Brody, 200 subscriptions from law enforcement agencies. Congratulations on that. Give us more details, please.
Yeah, it's a big milestone for us, and we're excited to get there, but that's just the beginning for us. The past few years, we turned to the subscription model that offers a 3 to 5 year subscription plan for these law enforcement agencies that'll allow them a little more flexibility when it comes to their capital expenditures and meeting their budgets and whatnot. So it gives them the flexibility and nimbleness they need to make these purchases, which then also goes together with our new products that we brought to market, which is really showing a strong amount of momentum moving forward. So we're on the right trajectory here, and we're hoping to see it continue on.
DGLY, with its many segments, must have many partnerships. We haven't even mentioned one of your key partnerships yet, a name everyone knows, NASCAR. Tell us more about that key partnership with NASCAR and your other partnerships.
Yeah, that partnership's been great for us. I think we're going on 6 or 7 years with them now, which has been great, and it's brought a lot of opportunities to us and our group, as the business-to-business opportunities there are dramatic, not just with the partners that NASCAR has, but also just customers and fans there that also get to see our products and see what they're capable of doing. So we've made some great relationships there, as well as with RLL, the IndyCar sponsorship. So we've had some great opportunities come through those, and one of them being an insurance broker, being their preferred commercial video camera, which is a whole nother part of our video solutions group that's excited to see a new product come out early of 23, and really going to see that product hopefully take off.
Brody, it's a company with a lot of moving parts. I'm sure you would agree there. Tie it all together into an essential value proposition. Why should an investor take an interest in DGLY right now?
Right now, we finally have new products to offer. We're going on, I think we had 8 years of the same body camera. So this past year, we've come out with 2 new body cameras, all new software back-end solutions, as well as a new commercial product coming up. That's exciting for us, and I think that the market's going to take it very well. We also have the medical billing side, which is growing both top line and bottom line. So we're very excited about what the future holds. We're going to continue to innovate, and we're going to continue to focus on these groupings we currently have and really focus on driving profitability for the shareholders.
It is a great story, Brody, and congratulations again on this new opportunity for you. Thanks for being with us.
Absolutely. Thanks for the time.
Now, to get more information on DGLY, visit digitalallyinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like DGLY. Again, visit redchip.com today and subscribe. In addition to our newsletter, You can also order Small Stocks, Big Money. This is a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon.com for just $18. Now let's recap the companies you met today. First, you met QYOU Media, stock symbol QYOUF on the OTCQB. QYOU Media added to its depth and reach of its products and capabilities throughout 2022. With 5 active channels now in India and the addition of Chatter Social in India and Q Studios in the US, QYOU Media is rapidly advancing its push towards driving increased audience size and strong revenue growth in 2023 and beyond. Visit QYOUFinfo.com to learn more. Then you met Recruiter.com, stock symbol RCRT on the NASDAQ. Through its ownership of industry-defining domain, Recruiter.com, the company has built a fortified foundation that has enabled it to quickly become the top brand in the industry. Recruiter.com is now scaling its fully owned, custom-built platform and has generated nearly $30 million in revenue in the trailing 12-month period. Recruiter.com is focused on growth in 2023 as it ramps up high-margin revenue. Learn more at RCRTinfo.com. Then you met DGLY, stock symbol DGLY on the NASDAQ. DGLY's diversified holdings, which generated a 191% revenue increase year over year in the first 9 months of 2022, provide multiple growth opportunities. The company's acquisition of new business lines and its evolution from hardware-focused sales to a subscription-based model for its legacy video technology solutions business over the past 24 months was a key driver in their strong performance. Also, the planned upcoming spin-off of its entertainment assets could unlock additional shareholder value. Learn more about DGLY by visiting DGLAllyinfo.com. Again, if you have any questions about any of the public companies featured on today's show, please call us at 1-800-REDCHIP or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile asset class. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies, so please always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new exciting emerging growth companies.